I'm joined now by Andy Headley of Veritas. He runs a 20-stock global equity portfolio on behalf of the Alliance Trust. Well, Andy, thank you very much for joining us. First of all, can you give us a bit of background on your specific approach to investing?
We look to invest in high-quality companies, wherever they may be based. Obviously, we're looking for quite large companies, so typically they're above $5 billion US. And we're very value disciplined. So whilst we're looking for good quality companies, we're not prepared to overpay for those companies, and we're very long-term investors. So typically we're looking to invest for 5 to 10 years in any investment that we make.
Now, 2018 was a really tough year for active fund managers. How did you do?
We did okay in 2018. The results were that we were quite well ahead of the market. So in relative terms, we did well. In absolute terms, it was okay rather than great. Generally speaking, because we're long-term investors, it's quite hard to segregate performance into a single year. So whilst our performance was good in 2018, obviously we look over much longer time horizons than just a single year. So when we look forward, obviously we're looking and certainly expect to deliver better absolute performance and continue with good relative performance. I think 2018, interestingly, was whilst the performance was okay, it was quite a difficult year in terms of markets. So obviously markets rallied quite strongly during the year, and typically in strongly rising markets, which we saw earlier in the year, we find it difficult to keep up. So we look to if we can keep up with a strongly rising market, we're doing quite well. But when markets decline, then we would typically expect to perform quite well in that environment. And that's exactly what happened in 2018, with a lot of our performance, our relative performance, coming when markets started to decline.
So what's the stock picking environment like in 2019?
So the end of 2018 saw a lot of volatility. So we saw volatility increase. And for stock pickers, that's a really good thing. So whilst markets decline, and obviously that's negative, seeing a change in correlation. So in 2018, we saw correlations of all assets and a lot of equities increase. And so everything was moving together. When we saw markets decline, we start to see that share prices move differently. And so we get more disparity between share prices. And for active stock pickers, that gives us much more opportunity to identify things that we can buy and also identify things that we can sell that have performed well. So we really like increased volatility and lower correlations, which is what we're starting to see. So hopefully in 2019, we see quite a lot more volatility, both upside and downside, which will give active stock pickers a good opportunity to perform well.
Now, you mentioned you're a stock picker, but there are all these big themes swirling around in the markets. Brexit, whatever Donald Trump's up to, the retreat from QE. Can you see any of these big themes impacting on returns and how you invest as a stock picker this year?
Yeah, I think it probably will impact on returns in 2018. But bear in mind, we're very long term. So we're looking out 5 to 10 years. And actually, these factors tend to have less influence over the longer term than they do in the shorter term. And so we don't pay too much attention to these issues in the short term. I think what we've noticed in the last few years, and is continuing, is an increasing interference from governments and from governments. So that is having an impact on some of our positions, where we're seeing that governments want to get more involved, and that can have an impact if there's a sudden change in policy on the companies that we either own or are analysing.
Have you got an example of that?
Yeah, within healthcare, we're seeing a lot of changes in healthcare. So you've probably seen in the US that there's a lot of political movement to lower drug prices. Now, we're not invested in any of the pharmaceutical companies, so we're not directly exposed, but we do own companies in the supply chain. And the politicians are looking at those companies in the supply chain to see if they're making supernormal profits. Now, we believe that those companies are very valuable within the supply chain and actually perform a very important role. And so we think that they will actually be protected. But of course, in the short term, what we see is a lot of political rhetoric and potential legislative changes that could impact those companies. And perhaps as a side point, one of the things we've noticed again in the last couple of years is the increasing importance of narrative in the equity market. So companies that have either a positive story or a negative story see very, very high impact on their share price as a consequence of that, even if the underlying fundamentals are not really affected.
What was your best performing stock of 2018?
Yeah, so our best performing stock was actually a very long-term holding of ours, which was Microsoft. So Microsoft was up nearly 30% last year, so pretty good performance. And we think that really what that's showing is just the fruits of Satya Nadella's strategy, which has been to be very much more open as a company, invest very much in the cloud, move to a subscription model, and that's really beginning to bear fruit now for the company, and they're seeing substantial cash flow coming from really that strategy that was started to be implemented 4 or 5 years ago. So it's taken time, but the performance is now coming through.
So tell us finally a couple of stocks that you've got high hopes for 2019.
It's interesting. So I think 2019 could be interesting in the healthcare field. So we have a couple of stocks which I mentioned earlier in the supply chain. And we think that issues in the supply chain in the US healthcare market will be resolved in 2019. And these companies are extremely cheap. So they're on typically 9, 10, 11% free cash flow yields. So they look extremely cheap to us. We think that these companies are going to become pillars of the health solution that we need to see in the US. And so they will be instrumental in delivering US healthcare. And so we're pretty confident over certainly a 2-3 year horizon that these companies will perform well from here.
What are they called?
So one of them is CVS, which is a retail pharmacy together with what's called a purchasing benefits manager. So they buy a lot of drugs. They've just recently acquired a very large insurance company. So they've become vertically integrated with insurance, retail pharmacy and purchasing benefit management. And what they're going to do is they're going to develop a strategy whereby a lot of healthcare moves into the pharmacy so that the first point of call for somebody who's ill isn't necessarily their GP or their physician. It's to go to the pharmacy, and a lot of drugs and treatment can be given at the pharmacy, and it will make a huge cost saving for the whole healthcare system if they can do that. So we think over time that will be a very successful strategy. And the other one that we think will perform well is a company called Cigna, which is a US health insurer. It too has just become more vertically integrated by buying a purchasing benefits manager. And so we think actually the US healthcare in that supply chain and delivery, so the healthcare services part, will end up with maybe 4 or 5 very large vertically integrated companies, of which CVS and Cigna will be 2.
We have to leave it there. Andy Headley, thank you very much.
Thanks.